Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if your retirement fund is actually looking out for your best interests or just playing a fancier game with your money. Today we're diving deep into the semi-annual report for the T. Rowe Price Retirement Blend 2050 Fund. You might be wondering if your hard-earned cash is working for you or just paying for someone else's. Nice lunch, let's decode this. First off, for the period ending the 30th of November 2025, the fund is offering two main flavors, Investor Class and I-Class. Think of them as different tiers of a service, and we'll see if the price difference makes sense based on what you get. They want you to know that all the important details like prospectuses and financial information are available online. But don't worry, we'll sift through it all to give you the highlights. Let's talk about what it costs you to be invested here. For the 6 months ending the 30th of November 2025, if you had a hypothetical $10,000 invested in the investor class, you would have paid about $23. That works out to 0.43% of your investment. Now, for the I class, that same $10,000 investment would have cost you just $13. Or 0.25%. That's a noticeable difference, especially I-Class aiming for the big investors with those lower fees. It really shows that the class of shares you choose can have a significant impact on your returns over time. Now, for some important numbers, the fund's total net assets stood at a hefty $699,744,000. That's a lot of money, folks. And how many investments are they holding to manage all that? Just 21. That means they're concentrating their investments, which can sometimes mean higher risk, but also potentially higher rewards if those specific investments do well. Speaking of how they manage money, the portfolio turnover rate was 4.7%. This means they bought and sold less than 5% of their holdings during this period. A low turnover rate generally suggests a more buy and hold strategy, which can be good for reducing trading costs and potentially capital gains taxes. So where is all this money going? The fund is heavily weighted towards equities or stocks. Domestic equity funds make up a massive 68.5% of the assets. Then international equity funds come in at 28.3%. Bonds, both domestic and international, are a very small part of the picture, just 0.7% and 0.3% respectively. There is also 2.2% in short-term and other investments. This tells us it is an aggressive growth-oriented fund leaning heavily on the stock market for returns. Let's peek at the top 10 holdings. The biggest chunk, 30.3%, is in the T. Rowe Price Equity Index 500 fund. That's essentially a fund that tracks the S&P 500. The second biggest is the T. Rowe Price International Equity Index fund at 14.1%. After that, we see T. Rowe Price Value Fund at 10.4%. And the Growth Stock Fund at 9.9%. It looks like they are building this retirement fund by investing in other T. Rowe Price funds, which is a common strategy for target date funds. They are using index funds and actively managed funds to get their exposure. Digging a bit deeper into the portfolio of investments, we see the fund holds a staggering $211,798,000 worth of the T. Rowe Price Equity Index 500 fund alone. The cost for this position was $54,569,000, meaning Tree's been a significant increase in its value. This is the core of the fund's domestic equity exposure. Then you have the T. Rowe Price International Equity Index Fund, where they're holding $98,377,000 worth. The original cost was $25,473,000. Again, a substantial gain and a key part of their global diversification strategy. Let's look at the net asset value, or NAV, per S-Share. For the investor class, the NAV per S-Share at the end of the period was $13.07, up from $11.49 at the beginning of the 6-month period. That's a decent increase. For the I class, it was slightly higher at $13.09, up from $11.49 as well. This shows positive growth for both share classes over the reporting period. The total return for the investor class for the 6 months was 13.75%. That's a strong performance. For the I class, it was even a bit higher at 13.93%. These returns are calculated assuming reinvestment of all distributions, which is how a long-term investor would likely experience it. Now, let's circle back to those expenses we saw earlier. For the investor class, the gross expenses before any potential payments by Price Associates were 0.43%. The net expenses after those potential payments were also 0.43%. This indicates that any expense reimbursements or caps are already factored in or are zero for this period. For the I class, the gross expenses were 0.25% and the net expenses were also 0.25%. This confirms that investors in the I class are paying a lower expense ratio, which is a significant advantage for them. The net assets for the investor class at the end of the period in thousands were $116,377. For the I class, they were much larger at $583,367. This clearly shows that the I class, with its lower fees and higher investment minimum, is where the bulk of the fund's assets are concentrated among larger investors. This section is interesting because it details transactions with what they call affiliated companies. Basically, it's money moving between T. Rowe Price funds. For the 6 months ending the 30th of November 2025, the fund had a net realized loss of $354,000 from these affiliated transactions, while there was a change in net unrealized gain of over $72 million from these related investments. This is a reminder that when a fund invests in other funds from the same company, the performance of those underlying funds directly impacts the overall performance and can involve complex internal accounting. Looking at the statement of assets and liabilities, the fund's total net assets are $699,744,000. This is the total value of everything the fund owns, minus its liabilities. The vast majority of this is in investments in securities, valued at over $699 million. The net asset value per share for the investor class was $13.07 with 8,901,665 shares outstanding. For the I class, it was $13.09 with 4456654 shares outstanding. This shows the I class has significantly more shares and more net assets as we saw earlier. The statement of operations for the 6 months ended the 30th of November 2025 shows net investment income of $596,000. But the big story here is the net realized and unrealized gain, which was over $72 million. This massive gain is what significantly increased the fund's net assets. The statement of changes in net assets highlights the increase in net assets from operations was over $72 million for the period. Capital share transactions also added over $156 million. This shows strong inflows of new money, especially from the I-class investors, which more than offset any distributions or redemptions. Now, let's touch on some of the accounting. They're using generally accepted accounting principles in the United States, which is standard. They also mention that the fund's net asset value per S-share is computed at the close of the New York Stock Exchange. This is important because it means the price you see at the end of the day might not be the price until after the market closes. They mentioned purchases and sales of underlying price funds other than in-kind transactions aggregated $184,715,000 and $27,375,000 respectively for the 6 months ended the 30th of November 2025. This shows significant trading activity within the T. Rowe Price family of funds, supporting their investment strategy. This section is crucial. The fund is managed by T. Rowe Price Associates. They pay an annual all-inclusive fee. For the investor class, this fee ranges from 0.44% to 0.34%. For the I class, it ranges from 0.26% to 0.19%. These fees cover management and operating expenses. The effective rate at the 30th of November 2025 was 0.43% for investor class and 0.25% for I class. This confirms the fee difference we saw earlier and highlights the lower cost for I class investors. So, what's the overall story here? T. Rowe Price's Retirement Blend 2050 fund is a growth-oriented fund, heavily invested in stocks, particularly through other T. Rowe Price Index and actively managed funds. The performance for the period ending the 30th of November 2025 was strong, with significant gains driven by the underlying equity investments. The distinction between investor class and I class is clear. I class offers lower fees, which is a big advantage for larger investors, and it holds the vast majority of the fund's assets. Looking at the direction, the fund appears to be on a solid footing for its growth phase, given its heavy equity allocation. The major risks here, as with any stock-heavy fund, are market volatility and the general economic conditions that affect stock prices. The low portfolio turnover suggests a long-term strategy, which is suitable for a retirement fund. One thing to note is the reliance on other T. Rowe Price funds. While this is common for target date funds, it's always worth understanding the expenses and performance of those underlying funds as they directly impact your investment. The separate accounting for affiliated transactions also highlights the internal flow of money, which is worth keeping an eye on. In conclusion, the Retirement Blend 2050 fund seems to be performing well, especially for its I-class investors who benefit from lower fees. However, potential investors should always consider their own risk tolerance and investment horizon, especially with a fund that has such a high allocation to equities. That has been our deep dive into the T. Rowe Price Retirement Blend 2050 Fund's semi-annual report. What are your thoughts on this fund strategy and performance? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate document deconstructions. And don't forget to join our Discord community linked in the description to continue the conversation. Thanks for watching and see you in the next one.